Hi, I'm Mark with Best of Us Investors. I've been investing for 40 years and would like to share some of my insight with you today. I'm not here to tell you what to invest in, but to provide you with some information that may help you become a better investor. Please hit the like button and also subscribe to the channel if you appreciate this content. Remember, this is for educational purposes only and is not financial advice. Okay, let's get started. So today, I was just reading some news and going over some investments, and I got a pop-up alert about Amazon. I am an Amazon owner. So it talked a little bit about Roku, and the price of Roku was going up. So I thought I'd look into Roku. I don't own Roku, and see what's going on and kind of go through a process of how I look at stocks. So let's get going. So here's the story from, as reported by the Hollywood Reporter. Roku stock rises after extending distribution deal with Amazon. The new multi-year agreement means that Amazon Prime Video app will remain in Roku's channel store. Stock in Roku rose sharply after it announced a new multi-year distribution extension deal with Amazon on Monday. Terms of the agreement were not disclosed, but the new deal means Amazon Prime Video app and the IMDb TV content will remain available in Roku's channel store. Roku and Amazon have reached a multi-year extension for their distribution agreement. Customers can continue to access the Prime Video and IMDb TV apps on their Roku devices, Roku said in a statement. That news sent shares up in Roku up $6.39 or 5% to $132.11 in mid-morning trading on the Nasdaq exchange. The new deal with Amazon comes as streaming video consumption is on the rise worldwide, and Roku is looking to making continued smart TV share gains. So this looks like to me, not knowing anything about Roku, that the agreement with Amazon is just being extended. So let's take a look a little more into Roku and see if it's something that would be worth basically investing in. So one of the first things I do when I look at a stock is I use Fidelity. So I just go to their uh, page. It goes over individual stocks, and here you can see Roku at the time. Right now, we have a price of 133.60. It's up $8.04 or 6.4%. So that's quite a raise. But again, we just got the news, and single stocks will go up or down based on news. The day range is 128 dollars and 22 cents, 134, and you can see the 52-week range is from 97.91 all the way to 490.76. And you can see it here on the chart, this year chart right here. It closed at 459.37 and has been pretty much on a downward run ever since. Just kind of leveling out here at 133.90. The next thing I'll look at is volume. It has a lot of volume, so that's good. And then PE ratio of 73.43. Now, to me, that's really high and something that would be a flag to me. I'm more of a value investor. You can see over here the price performance uh, was in the last 52 weeks is down 62%. They have an equity score here that's bearish, 1.1. Okay. You can see there's the news right here, Roku extension. I just skimmed down a little bit, no dividends. I like stocks with dividends. Earnings per share, you can see here, oops, heading down. Again, EPS 171, industry average is 287. And I'll come down and I'll look, here's the company profile. Here's some of the competitors, Apple, Netflix, Microsoft, Amazon. You can see that Roku's down 62%, industry average is down 21, Apple's up 41, Netflix is down 30, Microsoft's up 27, Amazon's up 3.49%. Fundamental analysis, again, this is just top of the line what I look at. You can see that based on S&P Global Market Intelligence, um, the stock is a little overvalued. Quality is on the low side. Growth stability is on the low side. Financial health is less than healthy, according to this chart. So anyway, we can come down top ETFs. ARK W, 6.42% of Roku. ARK K has 5.23%. And Invesco Dynamic Software is 3.15%. So that's a start. So the next step I go to is basically a little deeper in to look at what's going on here. So once I go through the preliminaries, I go into get a little deeper. I'll go into basically seeking alpha, and I'll put Roku in so you can see, and it will come up on basically its summary page. So it says right here, warning, Roku is at high risk of performing badly. Learn why. So it says Roku has characteristics which have been historically associated with poor future stock performance. Roku is overpriced and has a decelerating momentum when compared to other communication services stock to the point that it gets a strong sell rating from our quant rating systems. Stocks rated strong sell by our quant rating system have massively underperformed the S&P, as this article will describe. So that's interesting information to look at. So going back, we can see here's the price performance here over a year, down 59%. We can go 6 months, down 54%. Okay. Rating summary over here, you have if you're seeking alpha authors who rated a buy signal, the Wall Street analyst a buy signal, and their quant rating, which we just looked at, is a strong sell. And you can see here's how their quant system looks at valuation, growth, profitability, momentum, and revisions, and doesn't look very good from how they rate it. And you can see here, factors, Seeking Alpha grades each stock by 5 factors: value, growth, profitability, momentum, and EPS revisions. To do this, we compare the relevant metrics for the factor in question for the stock to the same metrics for all other stocks in its sector. The factor is then assigned a grade of A plus to F. So basically, it goes through in the communication sector, rates it against other companies that are in that sector, and they've given it basically a strong sell rating. We can then go and there's some analysts that have stories and news that you can go through. Sometimes I'll pop on those stories just to see. Again, those are recommendations and opinions by people. Uh, Again, here's the Seeking Alpha on Wall Street. They both have it as a buy. You can see strong buy for the Seeking Alpha 7, buy 11. Strong buy here for the Wall Street analyst ratings 18, buy 2. Um, so you can go see the Bears and the Bulls. Here's your company profile. So you can get a really quick idea of what Roku does. Now I know they're a streaming service, but let's just read it. Roku, together with its subsidiaries, operates a TV streaming platform. The company operates in two segments, platform and player. Its platform allows users to discover and access various movies and TV episodes, as well as live TV, news, sports, shows, and others. As of December 31st, 2021, the company had 60.1 million active accounts. It also provides digital and video advertising, content distribution, subscription and billing services, as well as other commerce transactions and brand sponsorship and promotions, and manufactures, sells, and licenses smart TVs under the Roku TV name. In addition, the company offers streaming players and audio products and accessories under the Roku brand name and sells branded channel buttons on remote controls of streaming devices. Provides its products and services through retailers and distributors, as well as directly to customers through its website in the United States, Canada, and the United Kingdom. Moving down, this is their revenue. You can see 512 million, 742 million in 18, 19, 1.13 billion. So you can see revenue is rising. And then they have estimates out here for 2023 of 4.85 billion. So rising revenue is always good. Now earnings per share looks a little different. You can see here earnings per share Q4 of 2021, the EPS and the actual. Here's Q1 of 2022. The estimate's 19 cents negative, and it looks like negative 39 cents estimate in Q2 of 2022. So that would be a negative for me. Um, Again, here's your earnings estimates. Here they show that 30 cents EPS in 2023 and 75 cents in 2024. Then you see earnings revision here. You have fiscal year one, up revision 0, down revisions are 16. So 100% down revisions according to Seeking Alpha. Here's your valuation grade of F, your growth grade of D plus, profitability C plus, momentum D minus. Here's your capital structure, market cap 16.99 billion, total debt 521.7 million. Cash on hand is 2.15 billion, which is good, depending on where they got it. We'll get to that later. and your enterprise value of 15.36 billion. So that's basically if you took the company and sold it off today with all its assets, what you could basically get out of the company. I always like to take that figure and divide it by shares outstanding to see what the share price would be if you did that. And at this price here, at 15.36 billion, and with 135.3 million shares, that would bring a share price to about $113.53. They do not offer dividends. I like dividend stocks. It's not a deal breaker for me, but I do like that. Institutions own about 66%, individuals 12, public and other 21%. You can come and they'll show you your peer group here. So here they have Formula One Group, Warner Music, AMC, 10 Cent Music. Okay, you can see the ratings there. Technicals, simple moving average, short interest about 7%, 8.25 million short. That's not too bad for a company like this. So that's kind of what I look at in seeking alpha. So the next thing I'd do is get a little bit deeper into if I was interested in this stock, and for the sake of this video, we're going to say I am interested. We're going to go a little further deeper in and take a look at what I look at with this stock. So the next thing I'll do is I'll come to the company's website. So here's Roku.com and just take a look around. I realize that websites and Facebook and such, the social media is all about marketing, and so you're going to get a positive spin on everything. But this is a good place to come and just see what's going on. Like here's how it works, how Roku works. You know what to watch, shop their products. Here's their support. You can come down and you can see their products here, and you can shop audio, TV, shop players. You can see award-winning originals, live news, sports. You can see what they offer. If you want to get into this, if you had more time, we'd get into more of this just to see what's going on. So you can see there's a deal today. If you need a reason for a Roku, right there you go. And so basically, you can come around and look and see uh, what's going on with Roku. I like to come down here at the bottom, and you can see their experience, product support. I go to the company, see if there's anything I missed about the company that they would like to put in. See, again, Roku, the platform, the channel, streaming devices, TV. If you want to learn more about this, you just click on a button and you can learn about that. Then I can go down and I like to really look sometimes at jobs and to see exactly if they're hiring. If they don't have any job openings, it's kind of interesting, for a company that doesn't. So you can see here, 887 jobs are found, basically. So looks like they're hiring, and that's usually a good sign that they have money to hire. And then most important is investor relations. This is where I really get most of the information. Now, I like financials, basically quarterly results, but mostly I like to go to the SEC filings. Now, these are the filings that they submit to the SEC. They have to be accurate. There's no marketing per se here. It is all fact on what they're doing, what their risks are. We'll take a look at the SEC filings, and you can come down and you can see different filings that they put in. I look basically for like a 10K. Okay, 10K is the annual report. 10Qs are quarterly reports. And at the time here, there are no 10Qs. So we're going to look at the 10K report, which we come over and and there we go. So you can see this goes right in annually and quarterly. This is the 10K. It talks about the company. You can scroll down a little, and here's your table of contents. This is where you'll find all your information. This is also where it's really, really boring for people to go and spend time to look at because it gets really into depth and it's really boring. But this is where I find a lot of information. Talks about the business, the risk factors, properties, all the way down. Part two is marketing, disclosures, okay, directors, executive compensation, such, and then we get into the financial statements. So right now, well, let's get into a few parts that I look at real quick. So 10Ks are quite lengthy. This particular 10K is on 160 pages long, so we're not going to go through everything, but let's just see if we can find some things in Roku that we might not have been mentioned, on the website or anything else. So first of all, we'll go to risk factors and just take a look. So risk factors are in every 10K, and every company has them, and it's pretty much almost the same kind of risk that you have. Here's risk related to our business and industry, and they have risk related to operating and growing our business. They have a history of operating loss, so on. Risk related to cybersecurity, they could be hacked. Risk related to intellectual property, property could be stolen or taken to another company. Risk related to macroeconomic conditions such as COVID-19, legal risk. Um, and here's something that caught my eye is risk related to ownership of our Class A common stock. And the thing that really caught my eye was the dual class structure of our common stock. So that's interesting to me. So I wanted to look into that just a little bit further. So Roku has a risk with their Class A common shares. So that's the stock that you would buy. They have a dual class structure of the common stock certificate, which concentrates voting control with these stockholders who hold our stock prior to our initial public offering, including our executive officers, employees, and directors, and their affiliates, and limits the ability of holders of our Class A common stock to influence corporate matters. So these Class B common stocks, they have 10 votes per share, and your Class A, which is what you and I would own, have 1 vote per share. The President and Chief Executive Officer, Anthony Wood, holds and controls the vote of a significant number of shares of our outstanding common stock, and therefore Mr. Wood will have significant influence over our management and affairs over all matters requiring stockholder approval, including election of directors and significant corporate transactions such as a merger or other sale of Roku or our assets for the foreseeable future. If Mr. Wood's employment with us is terminated, he will continue to have the same influence over matters requiring stockholder approval. So you have no approval of who's on your board or whether you can sell the company at what price. It's all going to be in the hands of peers, Mr. Woods. There are a few more things that we found just going through. And this is under the business section. And as a shareholder, you may want to know these items before you invest. Number one is seasonality. We have a historically seen seasonality in our business related to advertising and streaming player sales. Our revenue and gross profit are traditionally strongest in the fourth quarter of each fiscal year and represent a high percentage of the total net revenue for such fiscal year due to higher consumer purchases and increased advertising during the holiday season. Furthermore, in preparation for the fourth quarter holiday season, we recognize significant discounts in the average selling prices of our player sales through retailers in an effort to grow our active accounts, which typically reduces our player gross margin in the fourth quarter. So that's important to realize if you're watching the financials and you don't understand why they may have lower prices in the fourth quarter on their player gross margins. This is why. The other thing that concerns me is manufacturing. And in manufacturing, they outsource the manufacturing of the products to contract manufacturers using their design specifications. All their products are manufactured by our contract manufacturers in the People's Republic of China, Southeast Asia, and Brazil. Well, we know what kind of issues we're having with supply chain right now, and especially in China. So if you can't get your product out of China, either it's stuck on a boat or there's lockdowns where your factories are, then you're going to have an issue also with your revenue. So keep that in mind also as you consider investing in Roku. So these are just a few items that I saw that are concerning to me. But again, there's 160 pages, and it's almost impossible to go through each and every page um, in a short period of time that we have. So go and do your own due diligence whenever you look at a company. But I would suggest you go to their 10K or their 10Q. The last thing that we really want to look at are really the financial statements to see what we see uh, going. Are we growing? Are revenues growing? Do we have earnings per share? Financial statements are also located on the 10K, and you can see here's exhibits of financial statements. Here's financial statements and supplemental data and management discussion of financial conditions and results of operations. So let's go take a look at those and keep moving on. So we'll start out with consolidated statement of operations. And the first thing I want to look at is net revenue. So net revenue, according to their financial statements, comes from two different areas, the platform and the player. And we have 2021 through 2019. So we can see that net revenue over the last 3 years has actually grown on the platform. However, when you look at the player, you can see that the net revenue has actually gone down from 2020 to 2021. So total net revenue has increased, and it's increased every year. So that's looking good so far from that point of view. The next thing we want to look at is um, operating income. So income from operations. So you can see this is the first year that they actually have a positive out of the last three in operating income. They were running at negatives in 2019 and 2020. So that's also a good thing to see that they're actually bringing in positive uh, revenue for operations. The net thing we want to look at is net income. Okay. So net income is also comes in positive in 2021, and you can see that it has been negative for the last 2 years. So net income is growing, not a loss. So for 1 year, that's pretty good. And then our earnings per share, you can see we've gone from a loss, 14 cents per share, to a gain of $1.83 or $1.71 diluted. The last thing I look at is common shares outstanding. You can see that common shares are growing. So what's happening is the company is probably uh, issuing stock for money. We'll see that when we come up on the next financial statement. But what that does is it's diluting your share as a shareholder. So that's something I don't like to see on a financial uh, data sheet. So the next thing we're going to look at is consolidated balance sheet for Roku. Okay, and when we look at current assets, cash and cash equivalents, you can see that cash and cash equivalents is growing, which is a good thing. Inventories are remaining about the same, and then you do have some extra here for prepaid expenses and current assets. So what I want to see is total current assets exceeding total current liabilities, which is right here, which it does. So that tells me that this company has the ability to pay its bills in a short term. Another thing we'll look at down here is the total stockholders' equity, and as you can see, that has grown too. And what this is, total stockholders' equity refers to the assets remaining in a business once all liabilities have been settled. This figure is calculated by subtracting total liabilities from total assets. Alternatively, it can be calculated by taking the sum of share capital and retained earnings less treasury stock. And finally, let's look at our consolidated statement of cash flow. So you can see right here in 2021, uh, our net income is a positive 242,385. Then we go down through the line items here. Here's my old favorite, stock-based compensation. Well, they add that back in. So this line, these will be added in, and the negatives will be taken off. So they add in 187, 532 in stock-based compensation. And you can see that stock-based compensation in 2019 and 20 is growing. It's growing every year. So this they consider, since they haven't paid it out yet, that it's not an expense or something they can take off. So they just add it back in, which I think is kind of funny books to me. So when I go down and look at something, I take it the net cash provided by operating activities, and I take that back out. And so that would leave us with 4549, and you can see the adjustments going back to 2020 and also 2019. So again, they have stock-based compensations before they're paying out anything to us regular shareholders, and that's just something I don't like in a company. The good thing is that they do have cash flow from operating activities, so that's good. And then when we go down, cash flow from investing activities, you can see that uh, they purchased a business. You can see these expenses here, so we're at a negative 176,817. And then the last is the financing activities and proceeds from equities issued under incentive plans. So these are plans that people bought their stock options, and so this money comes in. And then you can also see that it looks like they had an offering of stocks, and at the end we're bringing in about looks like $1 billion in net cash provided by financing activities. So a majority of the cash is still not coming from operating activities; it's coming from financing activities. So for me, that's pretty much a negative. But the good thing is they do have cash and cash equivalents, you can see down here. so they can fund the company for a while longer. But at some point, you're going to have to continue to be more profitable for this company to make it. So that's kind of the process I use when I'm evaluating a new stock that I'm not familiar with, such as Roku. It came from just an alert that came up on my system today that Amazon and Roku had a deal. So looking into it, I went to Fidelity, I went to Seeking Alpha, I went to the website itself, and I went into the 10K just to get a little more understanding. And this was kind of an abbreviated way that I look at things. So from that, I do a little notes on what I think is good and what's bad. And the positives on Roku, I believe, are rising revenues, rising net incomes, growing streaming hours, growing average revenue per user, growing income from operations, and they do have cash and cash equivalents, even though that comes from financing activities. So those are the positives that I would see out of Roku. Now the negatives for me would be the P/E ratio at 73. P/E ratio is pretty high, and it's higher than I would ever probably buy a security at. The stock price, if you look at the stock price from last July until now, you'll see that it's on a downward trend from the 400s down to 135, I think, today. So that's something that would be concerning to me. They have a lot of competition: Apple, Microsoft, Netflix, uh, Disney. A lot of competition that they're going to have to fight for viewers for. So that concerns me also. Seeking Alpha, their quant ranking was a strong sell. So I do take a little bit of concern about that also. And they have lower revenue from their player sales, so I'd have to look into that a little more to figure out what's going on there. Increasing stock-based compensation. Now, this is just taking away uh, returns from shareholders, in my opinion, until they become more profitable. They have just 1 year of net income. I'd like to see at least 5. They have increasing number of shares. Of course, that's from all the offerings that they have to fund the operation. So that's just diluting me as a potential investor of my value. And a majority of operating cash comes from financing activities. So uh, until it came from operations, I wouldn't be interested in this stock. So, I wouldn't be putting any of my money in the stock. That doesn't mean it's not a good stock or not a good company. It just means that it doesn't fit my timeline and my risk horizons. I think that it's going to take a long time to get my money back if I put in a buy order for X amount of shares at $135. Unless another news story comes out that Amazon or someone else is partnering with them, I don't see any profitability for a while. They're going in the right direction. They're just not going fast enough for me. I would like to see 5 years of net income and reduction in the number of shares. If I could see that, then I would consider Roku. But uh, at this point, it would not be something that I would invest in. So when I always say at the end of the videos, know what you own and why you own it. This is how I know what I own. I look into things pretty deeply, and it's kind of boring and monotonous. But if you're going to put your money into something, you should know why you're putting your money into it and should be able to explain it to someone. So until next week, please hit the like button and please subscribe, and we'll see you next week. Thanks a lot.